Tesla stock is back yet again, ladies and gentlemen, up 3%, almost $260 per share. And we have lots of breaking news to go over, and I want to put this move into context for you, specifically in regards to those short positions. Shorts, it's being reported, they took out massive short positions right before the delivery numbers came out. Talk about bad timing. This article from Bloomberg says hedge funds piled into short bets against Tesla right before it announced delivery numbers that triggered a 20% stock rally. 18% of the 500 plus hedge funds tracked by Hazeltree had an overall short position on Tesla at the end of June, the highest percentage in over a year. Tesla short sellers lost billions last week. And even today, Tesla shorts are down almost $800 million again. I do believe eventually you will see a large short squeeze based on shorts just being dead wrong on Tesla. The longer term thesis on Tesla that we have heard countless and countless of times over again, competition is coming, Tesla will not succeed in robotaxis, Optimus will be nothing. The same things these shorts have been talking about for many years that continue to be debunked, and Tesla continues to show improvements in these areas. Well, eventually, simple price action will squeeze these shorts out of their short positions. As I talked about in the last video, you can make an actual fundamental valuation case for Tesla stock over $400 by the end of this year. If you tack a short squeeze on top of that, I could see Tesla running to at least a $2 trillion valuation. That would be over $625 per share. So if you are a retail investor, maybe you sold out of Tesla, maybe you're thinking about buying more Tesla, I do think there's a lot of upside still left from here, even in the short term. Longer term, there's obviously a lot more upside, but still, even with this rally, Tesla looks better than ever. But keep in mind, I am not a financial advisor, and on that note, it is time to get into all of your Tesla stock news today. Since we're on the topic of Tesla shorts getting absolutely blown out, or at least as you're about to see, they are getting just decimated right now. Sawyer Merritt writes on X, short positions in Tesla have just climbed to their highest since 2021 at 3.84% short interest of the float, $31 billion worth of shares currently sold short. And that is according to Ortex. Here on the day today, you can see some shares are being covered. You have return shares of 3.93 million. You have borrowed shares of 1.76 million. That means on net, potentially about 2.1 million shares are actually being covered today. Overall, there's over 106.5 million shares that are currently sold short. So this is a drop in the bucket. And what we have seen in recent days as Tesla stock has went higher, shorts have continued to short more shares. This is actually the first day within this rally that we've actually seen a net short covering. Every other day, it's been shorts taking on more short positions, if that just puts this rally into a little bit of context. Of this rally, 0% of it has been based in aggregate off shorts covering on short positions because they just haven't been doing it. And trust me, I look at this data every day and I report it to you guys in every video. Now, what's interesting about this 2.5% rally today for Tesla is it's actually coming on news that Tesla is urging the courts to reject a $7 billion settlement to the 37 lawyers that were involved with trying to reject Elon Musk's compensation package. Now, I try not to be a fortune teller all the time. I try not to predict the future with any large degree of certainty. But when you see a stock react to something as aggressively as you are today, up over 2%, and yes, it is volatile, that can kind of tell you what's happening. For an example, if Tesla was destined to have to pay $7 billion to these lawyers, Tesla stock would probably be down today. If that number is going to come in, much lower than that, Tesla stock, well, that's probably why it's up today. Big money tends to have more information than we do, so odds are big money already knows Tesla's not going to have to pay out $7 billion, and this could actually be a much better potential outcome for Tesla than expected. So judging off of what Tesla's stock is doing today, I would imagine Tesla is not going to have to pay anywhere close to $7 billion, and that will be seen as another positive for Tesla's stock. But this is the news that is breaking today. It says Tesla shareholders will appear in court on Monday to argue that an unprecedented request for more than $7.2 billion in attorney's fees to be paid by the company is outlandish. The latest development, Musk's $56 billion pay package case. So you actually have shareholders that are now going to court saying, that's a crazy number. That would equal roughly $370,000 for every hour worked by the 37 lawyers, associates, and paralegals. Which clearly that just sounds ridiculous. I mean, these guys should get $20 and be sent off on their way, considering the vast majority of shareholders wanted Elon's compensation package to be approved and never have this debacle to begin with. Where I come from, you either win a case or you lose a case. In this case, it seems like they lost. Elon's comp package is reinstated. The judge is probably going to reinstate it. So in that case, you should have took your fees from someone else. But again, judging off of the massive outperformance of Tesla's stock today, I don't think we have anything to worry about. We have one of the top 10 largest banks in the world, PNB Paribas, that makes a new $566,000 investment in Tesla in Q1. Lucid delivered 2,394 cars in Q2 2024, up 70% year over year. The company produced 2,110 in the quarter, the company announced. But it's not all great for Lucid. It is being reported by many news outlets that Lucid has about a year left of operations without more cash being infused into the business. But let's be honest, their sugar daddies over in Saudi Arabia are going to bail them out. Must be nice. Tesla is looking to hire a senior battery process engineer in South Korea. The company recently started posting new jobs in South Korea. Battery maker LG Energy Solutions Q2 profit dropped 58% year over year to $141 million, the company said on Monday. Tesla regains the top spot as Koreans' favorite foreign stock. According to the Korea Securities Depository, the total holdings of Tesla stock by Korean investors amounted to $14.67 billion as of Thursday, which is pretty impressive for a country like South Korea that has less than 80,000 Teslas out on the road today. Seems like, judging off of this, Koreans take well to the Tesla ecosystem, and even potentially in the country, there could be a lot more sales to come from here. It was recently reported that the new Model 3 and the Model Ys are starting to really be shipped to the country now. Zengler on X, he says, legit breaking news, massive steel delivery at Giga Nevada for high volume Tesla semi factory. It's finally kicking into gear. He says he will have a complete video coming in the next few hours. Penji on X says if this rumor becomes true, then Tesla stock would easily surpass $400 after August 8th. And he shared this image of this other user commenting, it's rumored that the former CEO of Uber, Travis Kalanick, will be introduced on August 8th as the new head of the robotaxi division. Elon Musk yesterday confirms that that is false, or at least that is not the plan as of right now, which some people found a little disheartening because there was this pretty strong rumor. Elon Musk comments and says all that matters is improving Tesla's self-driving AI such that miles between interventions is better than a human. And look what we have today. Tony Sacconaghi that is back on CNBC to essentially bag on Tesla. Now, he goes on to say that we believe that autonomy is a ways out, and we don't believe that Tesla will uniquely solve that problem. Waymo's been working at this. They've been doing trials since 2012 on self-driving. Tesla has not done any public trials. Sawyer Merritt provides great context. He says analysts often make the mistake of assuming that Tesla's self-driving competitors, such as Waymo, easily surpass Tesla because they've been doing it longer, already offer limited driverless rides, etc. The issue is scalability and approach. Nobody has an existing fleet of millions of data collecting vehicles like Tesla that are self-driving capable. That's a unique data advantage. Tesla's FSD doesn't require pre-mapping, geofencing, or expensive and bulky LiDAR and radar equipment on top of the vehicle. Tesla's full self-driving can be activated on almost any road in America, and while it's not flawless, it can handle most situations at this point and is only getting better. In contrast, Google's Waymo doesn't have this capability and their vehicles are expensive. Offering a limited number of autonomous vehicle rides in specific cities is one thing. However, achieving the profitable mass productions of millions of self-driving cars that can operate reliably on any road without pre-mapping is an entirely different challenge, and one that I believe Tesla is uniquely equipped to succeed on first. Which was really just a beautiful way to summarize that up. But take a listen to the full interview Tony Sacconaghi just gave on Tesla stock on CNBC.
We're going to get into big tech with our next guest, but let's start with Tesla. Shares shot up by 27% last week and wiped out losses for all of 2024. Our next guest, though, said in a recent note that he expects Tesla to face many of the same challenges next year that it's facing right now, and just with more competition. Joining us right now is Tony Sacconaghi. He is Bernstein's senior research analyst. He actually rates Tesla underperform with a $120 per share price target. Tony, I'm looking at it. Tesla is almost at 150 or 250. That is so far above your price target. What do you do at this point?
Good morning, Becky. Look, Tesla's had a great run, as you mentioned, up, I think, 25% in the last week, almost 40% in the last couple of weeks. It's clearly riding momentum of better than feared results, but this is a company whose deliveries were down 5% this quarter. They were down 9% last quarter. It's trading at 125 times earnings. There's anticipation that things may get a little better, but they're still not good. And there's anticipation about a robo-taxi event in early August. And so we could continue to see some momentum in the stock, but this is meme-like, quite frankly. The valuation is disconnected from the fundamentals. The company was supposed to earn $7 in earnings this year. Consensus estimates are now $2, and the stock price is really not that different. And it's really about enthusiasm that things may get better and that Tesla may say something really exciting at its robo-taxi announcement. But at the end of the day, stocks get measured on cash flows and future cash flows. And we just see a disconnect between what that earnings and cash flow power is and the company's current share price.
Tony, I hear your point, but that is the same argument that the shorts have been making against Tesla for a very, very long time, to their great dismay. I just wonder, do you keep your $120 price target, or is there a point where you have to say, okay, forget it, we're back to earlier valuations of Tesla, and I'm not going to stick to it, or do you?
Well, look, I mean, of course, any investor has to be open-minded about what a company may or may not do. And so if we did see a path where Tesla could be a leader in autonomous vehicles, or Tesla could build a very sizable business of building humanoid robots, of course, we would have to adjust our outlook and our future estimates and accordingly our price target. But at this point, we don't see that. We believe that autonomy is a ways out, and we don't believe that Tesla will uniquely solve that problem. Waymo has been working at this. They've been doing trials since 2012 on self-driving. Tesla has not done any public trials. Not to say that Tesla won't do well and sell full self-driving. It's just not something that it necessarily will be able to exclusively do. And you have to almost believe that to get to the types of valuations that Tesla stock is currently trading at.
You know, I try to be respectful on this channel, but this guy is just dumber than a bag of rocks. I'm sorry, I gotta just call it how it is. The number one thing that I was thinking there is next year we're gonna have the same problems. Okay, that's possible. But the problem next year is going to come with rates that are much, much lower. Citibank just put out a report that says this today. The Federal Reserve might cut interest rates 8 straight times beginning in September for a total of 200 basis points. I mean, especially if the polls are correct, politically speaking. We try to stay as apolitically possible here on this channel, but let's face it, Trump's a real estate guy. If he's leading in the polls and if he ultimately wins, which looks likely at this point, if you look at betting odds on any website or if you look at Bloomberg, it doesn't matter. That's going to give you even more rate cuts. So what did we just see when Tesla bought down the interest rate on the Model Y and the Model 3? Tesla just had a fantastic quarter, ran down inventories almost 40%, gonna boost cash flows and gonna boost profitability. I mean, cutting rates is not only gonna help Tesla vehicles sell, it's also gonna help Megapacks sell. And that's a $2 million purchase. That will allow Tesla's profitability to really pick up, as they will have to buy down less of the interest rate. If, let's say, the financing cost for a Tesla falls to 4% at some point next year, they don't have to buy down as much, going from 7%, to 4%. It would be less of a hit to profitability. Now that's number one. And then obviously Tony Sacconaghi clearly has no idea of the potential of robotaxi in China. That wasn't even mentioned. Don't even ask him about that. He's not gonna have a clue what you're talking about. He's going to say that's decades away, but let alone even the opportunity here in the US. Once that business gets fully scaled and rolled out, that is going to be a cash flow machine almost directly to the bottom line, I'm sure, with margins that can exceed 40, 50%. And anyone that really follows Tesla knows this. So an analyst over at Bernstein at that, a well-respected firm that doesn't understand these things, really just makes me more excited. I don't care that, he's negative on Tesla. That's great. You got to have people negative on Tesla to keep the stock going higher. But for analysts to think this way, to be this behind on what's going on at Tesla, really just means there's a lot more room for upside gains. Now here today, you did have consumer inflation expectations that came in at 3%. Last month, you were at 3.2%. This was right in line with estimates. You did also have a 6-month bond auction and a 3-month bond auction that came in slightly lower yields than the last ones. 10-year treasury yields today are sitting at 4.28%, not really doing much of anything. The percent of stocks trading above their 50-day moving average is up to almost 42%, which is actually seeing about 2.65% of all stocks out there on our markets breaking above their 50-day moving average today, which is a pretty good day. You can see here that you are seeing a bit of a rotation. The Dow is down 0.16%, S&P is down 0.04%, NASDAQ up 0.1%, but look at the outperformer today. The Russell 2000 up 0.5%. I have been calling now for the last couple of days for a rotational correction. This could be expectations that are too high for big tech earnings. We'll talk about that more in the next video. Whew. Yeah, expectations have done nothing but go straight up. You're set up for some disappointment at some point. Is that this earnings, next earnings, or later on? I think that's the bigger question. But when that big tech disappointment comes, then you will likely see that rotation of capital out of big tech into small caps, into mid caps, other areas of our markets. As long as the economy is still doing okay, we're still looking at the prospects of rate cuts coming from the Fed and a soft landing. This turns into a crash if you get the Fed cutting rates because the economy is weakening too much, which as of now, I don't know when that happens. It could happen. It may not happen. We just don't know. We need more data. So in this event of a rotational correction, you could actually see Tesla stock go up as the S&P and the NASDAQ on a headline basis actually fall into a correction, which is kind of what you're seeing today with Tesla up almost 2% and the S&P that is falling as we currently speak. Over on Stock Twits, this is hilarious. As Tesla stock is up 2%, the sentiment is at 23, which is extremely bearish. Retail has been very bearish on this Tesla rally. I don't think they're necessarily bearish on Tesla. I think they're just mad. They missed the rally. I've talked about that many times, and I think that's another source of buying pressure to come that ultimately sends Tesla stock to new all-time highs, likely by the end of this year, around October, in my personal opinion. As you can see over here on Google Trends data, the Cybertruck is ticking down from 77 to 72. The Model Y is ticking up from 25 to 28. The Model 3 is going from 23 to 24. The Model S from 10 to 11. And the Model X from 8 to 9. So seeing an increase across the board on Google Trends. So that is going to do it for this video. Stay tuned to the channel for the next video coming out at 8 p.m. tonight. We're going to talk about the current state of our markets. What is coming tomorrow that you need to know? Yeah, there could be a lot of volatility in stocks tomorrow, which is something we have not seen in a very long time, and also break down specifically what's going on with Tesla's option activity and the technicals. We'll take a look at the chart. What does the chart suggest is coming next for Tesla stock? You guys have a fantastic rest of your day. On the way out of this video, again, hit that like button and subscribe to the channel. It's free 99. It costs you absolutely nothing to do so. Most importantly, enjoy the rest of your day, and I will see you in the next one.